Hello and welcome back to another video. This is part two of the video that I did 3 or 4 days ago, talking about my mortgage and situations that I discovered. That video seems to have gotten a lot of views, so I appreciate that. If you're new to my channel, my name is Martin. I welcome you here. And if you are a returning viewer, I welcome you back. I wanted to clear up a few things. A lot of people were making comments and saying that they had never heard of fees being added to your mortgage and that type of thing. So I thought I would address that and let you know things that I found out. So stick around. I have some notes and we will get into it. So the first thing I wanted to address was I had stated that my maturity date is June 1st of 2026. That is not the date that the amortization is over. That is only the end of the 3-year term. So I still have 10 or 20 years, depending on to pay off this particular property, unless I was to pay it off sooner by putting down lump sums every year. With this particular mortgage company, as with most, you are allowed to put down 20% or whatever annually to bring down the cost of the total mortgage, I suppose, by reducing the interest you pay over time. So that's number one. June 1st of 2026 is when this particular is the maturity date on this particular term. Now the interest rate was pretty high. I got this interest rate at 6.74%, and it is with an online bank here in Canada. And everything was good in the beginning. Back when I got this loan, there were other mortgages that were high as well, but not quite that high. But for various reasons, this is the bank that we chose, and it was one that we have used and renewed with. Now, I did do some research, and I went online, and one thing that kind of annoyed me was with this particular bank was if I didn't go online and or go onto my account to check on my maturity date, I would not have known that they had raised some annual administration fees from $360 a year to $480 a year. So they've tacked that on to my monthly mortgage. Now, October 1st is my next payment, and it has gone up by about $40. So it's fine. I mean, I do have the money in the bank, but I would have looked at that and go, why all of a sudden am I paying more? Now, the mortgage itself is only $1,650, which is great. You go now and try to rent an apartment somewhere, a one-bedroom apartment in a lot of places is going to be $1,700, $1,800, $1,900 a month. It is getting ridiculous. What adds the cost is they include the annual taxes, property taxes, on the mortgage, plus now they've raised fees twice. So that's raised up. I think originally my mortgage was the $1,650 plus taxes. It was only $1,800 and something, and now it's approaching almost $2,000. So that is what got me interested in looking at making some changes. So I did contact another online bank. I do deal with a company here. It's a fintech, financial technology company called Wealthsimple. A lot of you folks here in Canada are probably aware of Wealthsimple, and you probably use it. It's a great low cost to no cost investing app. You can, it's like has a bank account. You can almost replace your big bank by using this. So it is a great product. And now they partnered with with an online company called Pine, which is also online only. But they are a mortgage company specifically, and they've been around for 5 years, and they just passed the $1 billion mark with Canadian mortgages. So I contacted them, and I could get a mortgage with them for between 3.89 to 3.99% interest, which is really good. And they would also give me $3,000 towards any early payout penalties with my former or my current financial institution or mortgage company. So I contacted the my current mortgage company, bank, Equitable Bank, and I discovered that since I have 9 months left, I would have to pay almost $8,000 in prepayment penalties. So obviously, I'm not going to do that. That's way too much money. So what I will do is I will just continue to stay with the company I'm with, and pay those extra fees until I get to within a couple of months of the maturity date, and then I will look at starting the process of changing. Other folks have given me names of mortgage brokers as well, so I will check into that as well. I also found out that the company or the mortgage company I'm with, they would be willing to do a blended rate, which means the rate I'm paying now, the 6.74%, I could blend that rate with the current prime rate, which I'm not sure what it is. I forgot to check, but it's probably 4.5% to 5%. I could do that, and they said they would give me a 1-year term if I did it right now of 6.68%, 2-year fixed rate of 6.21%, or a 3-year term of 6.02%, all the way up to a 5-year fixed term of 5.77%, and so forth. And I've decided not to pursue that just yet. As I stated, I'm going to wait till I'm a lot closer to my actual mortgage maturity for the term. Then I will look at my options, because obviously the closer I get to that maturity date, the less my penalty would be. And if they're gonna if Pine or other companies are going to give me some money towards those penalties, it might be worth looking into that. If any of you folks have experience with that, leave a comment. I have gotten a lot of comments and a lot of stories. I thank you for sharing your experiences and your stories as well. Now, it has been a troubling last few days, as many of you folks know, with the violence that's been happening in the United States, and we will touch on that in another video. So folks, I hope you have had a great weekend. Tomorrow is Monday, and we will continue with our conversations. So thank you for watching. I hope this kind of cleared up a few things, and I will see you in the next video. I hope you have a great week. May God bless you.